Hey, this is Jim. It is 11:14 a.m. in San Francisco, California on May the 15th. Please note that all discussions, analysis, and information presented are for general informational and educational purposes only and should not be construed as financial or any other form of professional advice. So if you guys have been with me on this channel since 2021, you know that I don't run commercials, advertisements on the channel. I don't monetize it like these other guys do because I don't want to waste your time with commercials. And I also have never one time ever asked anyone to subscribe or like or click or smash anything. Today, I am going to shill Anemoi Predictive Technology, the Anemoi Terminal, which is my other company, something we worked really hard to build, and a tool that I think is the best tool that's out there. Dirt cheap, and in my mind, in my eyes, the best tool that you can use to track everything that's going on with GME and AMC and all the other stuff that should spark off here. Not to mention you'll have access to crypto, which is something that's a fun market to trade if you haven't traded it after hours or on weekends, especially those meme coins. So anyway, you go to the apterminal.com and just click on subscribe if you want to do this. This is the basic plan, which is just dirt cheap. And again, it includes the bigger picture, the 6-month chart that I'm going to show you guys in a minute here with all that data. And it includes the cryptocurrencies where you can hover over this and see all the crypto pairs. But, you know, there are the majors: Bitcoin, Ethereum, Solana. So, and then also with Doge and some of the other interesting meme coins. So anyway, you guys, this is dirt cheap. And this is my shill. But it's a shill that I think helps you guys a ton. And, you know, we barely make any money on that at all with our AWS costs in the back end and all the front end and everything else. It's an expensive technology to run. So I'm going to bounce over here. This is what the terminal looks like if you guys have never used it or subscribed. That basic would give you access to the stocks tab that I'm going to review right now. So we're taking a look at AMC, and I want to show you guys the sort of the important takeaways really quickly here and then move on to the actual chart. So the reason we knew that eventually here AMC's upside move would be as dynamic as it was is because if you hover over the weekly velocity, you see that? I'm going to go ahead and render that. This weekly velocity since December has been improving / repairing for this entire period of time as price, the white line, continued to decline. So let me actually enlarge this and then I'll show you guys what I'm talking about. So let me get rid of a couple other things. I'll get rid of the daily trigger and get rid of the hourly trigger just to clean this up. So what you're looking at here is just the price line, the white line, and then that yellow gold line is the weekly trigger. Again, if I render the weekly velocity, this tells you everything you need to know. When price, this white line, continues to post lower low after lower low, and it's important that it posts lower lows against rising, repairing weekly velocity. So although weekly velocity was still negative during this entire period from December till now, it's repairing. So what this tells you is that price, when it starts to take off above the daily trigger, which it did a couple days ago on ignition volume, that price is going to want to attack the weekly trigger. So all you're doing is you're matching up the time frames. A bullish divergence for weekly velocity means that price wants to revisit the weekly trigger, right? That's all it's telling you. Now, the reason price overshot as it did is because it actually moved all the way up to another level that we've been talking about, which is that hidden retest level at 1325 that was generated through, you know, the BAM methodology that I've shared with you guys. So although price did not move up to the 1325 during the cash session, pre-market it was up slightly above 1325. Now, the other thing we knew from using the Anemoi terminal is that even though we had this beautiful, long-lasting bullish divergence in velocity versus price, we still came into this week with net negative velocity, right, at a minus 34 cents. So what that tells us is that when price overshot to attack the BAM hidden retest level at 1325, the Anemoi tool was telling you at least this week, and especially early in the week, price would want to be pulled right back down to this weekly trigger at $7.36 because the fish is swimming against the stream. This is negative downside weekly velocity, it's not the type of setup for just a spike above and a runaway to the upside, which a lot of other people were talking about, and we weren't. We were telling you guys the odds favor the snapback. That's what we got. Now, the reason price dropped as low as it did, I'm going to show you in just a minute here. So let me show you guys that daily trigger again. So there was your air pocket. This is why we knew. You see how stubborn price is against the daily trigger, and this is all Adam Aaron diluting and news and all that. But when it finally took off, that was your air pocket. So it was a beautiful move between 322 and 736. Very, very quickly. And then again, the overshoot, that was the hidden retest level above, and then you get the snap back. Well, if you look at the hourly trigger, you can see that's what prices move back down to. And I'm going to show you guys in the day trader view right here what's going on. So here you go. This is price moving in AMC, moving right back down to the hourly trigger, which is this violet line, $5.22 this hour. It'll flip in about 10 minutes and generate a new level, which will be real close to this level because we're pancaking on velocity. So the main takeaway here, if I get rid of velocity, is that this is a 3-trigger cluster. You guys recognize this. So dynamic moves are made to the upside or the downside out of 3-trigger clusters. You had it right here, and then here we are again. On a bright note, you can see as prices move down, you see these vertical blue bars. That's the 5-minute velocity. And so let me get rid of the triggers. So as price has moved down, the black line has moved down toward this hourly trigger, the violet line. You can see the blue vertical lines, which represent 5-minute velocity, are less severe, meaning the algorithm is buying. And it's sort of this, soft landing that you see here on this hourly trigger runway. If you were to see these 5-minute velocity bars increasing to the downside, so here's a minus 0.127. If this would have continued to become more severe as opposed to less, then you would have seen a velocity always leads price. You would have seen price just plunge right through that hourly trigger and rocket to the downside. So this tells you, based on the 5-minute velocity and again on the 1-minute velocity, that the algorithm is buying as price glides down into this hourly trigger. So you can see hourly velocity pancaking here, like dead flat, 0.000565. You ignore that for the time being. What I like to do, if I don't have the ability to kind of cheat and lean on the BAM model's future zones of strength and kind of front run a 3-trigger cluster signal in Anemoi, is I like to wait for price to clearly break above the hourly trigger and then pull back and sort of retest and then curl back up before I go with it. But in general, you guys know that this setup is getting potentially very bullish looking, and all you have to do is wait for this bot to flip from flat to long, and then that would be a buy based on the Anemoi terminal, and the stop loss would be below the price low, so the black line, $4.90, the price low prior to the buy signal. So it's that simple. As far as GME goes, same thing. The reason why GME is not in a better position to just run with a scalded dog type setup is that you can see it's battling against this downside monthly velocity. So you got another half a month to go against that backdrop. Your best hope to see upside dynamic follow through is to monitor the weekly velocity, and you want that weekly velocity to continue to print higher levels. That way, weekly velocity can fight against that monthly velocity that's trying to pull you down, because clearly monthly velocity coming into the month of May there it is right there. It's negative, so this is fish swimming against the stream. If GME can continue to remain firm and close, above $21, which is not that tall of an order based on where it is right now, but close above $21 at the end of May, going into June, then that takes care of this velocity problem, and then everything is basically pedal to the metal. Again, you can see if you drill down to the day trader chart on GME, same setup. I mean, the algorithm that is being run against GME and AMC is the same one. So you can see that the three trigger cluster is not as tight, but it is a three trigger cluster. The velocity characteristics are not as good. You can see that as price slammed into the hourly trigger, that 5-minute velocity was printing the most negative. Same thing with a 1 minute. So this is a little more suspect here. You need to be cautious with GME if you guys are monitoring the Anemoi terminal day trader chart right now. And what I like to do is watch the 1 minute velocity, and you need to see 1 minute velocity lead the price move up. Okay, so let me get rid of the triggers. So in other words, as price posts higher highs, if it does post higher highs, you want to see those vertical 1 minute velocity bars continue to improve to the upside. So here's a 0.21 reading, and here's a 0.22 reading. If that black price line starts to break out, you want to see a velocity leading price. That's the key. Same thing with the 5 minute. And again, you want to be especially careful with this because of the way velocity looked as price coasted down into the hourly trigger. Now, sometimes that can represent capitulation, but this has more of a look of a soft landing with really ragged 5 minute velocity. So you want to make better late than early on this setup here. All right, let me bounce over to take a look at the price chart on AMC, and I'm going to show you guys exactly what just happened and this beautiful speed line attack as it was moving up into the BAM hidden retest level. Okay. If you guys have been watching my videos, the most important downtrend line that we've been following here on the 5 minute bar time frame is this downtrend off the December 4th and December 14th highs. Okay, that's that thick red line. As we move forward, we had the rejection. What date is this? This is Feb 28, and this is March 7th, and then you break above and you start to do what I call a bear crawl, meaning it's not a clean rejection back below. Price is kind of rattling down the line. I call that a bear crawl. Now, we were looking good and starting to curl back up to where we had gone through the A, B, C, D vibration sequence here on kind of a nice stabilizing bear crawl. And then, man, we were about to be off to the races, and what happened? We know what happened. Aaron drop that right on our heads. So right back down again underneath that important red downtrend line. We hit this low down here. We'll have to talk about this 258 hidden retest level down the road. But here's what happens. We get two beautiful buy signals out of the hole here. We get a really sharp trajectory on the first leg up. Remember, I've always said, in my work at least, the reversal first leg up off of a low or a high is hugely important. I view it as sort of the birth of the fractal, and it tells you everything about the personality of this child throughout its whole life, meaning that after sharp declines or sideways consolidation, the legs to the upside should be following this same trajectory. And then more importantly, as we'll see in a minute here, this speed line that looks like it would be a totally irrelevant, goofy crayon on paper line to draw, you're going to see how important that turns out to be in retrospect. That's called our primary speed line. And then you guys know this one's called the secondary speed line. So, off the tops of the highs on the first leg up, and then off the highs on the second leg after the first correction here. Here's the important takeaway based on vibration. All the goofballs that laugh about vibration don't understand the universe. They've never read about Tesla. They don't understand 369, and they don't understand that everything vibrates, including their body, as they're posting a tweet making fun at me for using the word vibration. So here's the essence of sort of the core of the behavioral analysis model, and you know, my most important discovery, I think, in addition to the hidden retests. So you have your downtrend line here, very small degree downtrend. You have your price breakup. Where price breaks that downtrend line, that's the point of origin of the horizontal vibration. You want to see an A, B, C, D, and then if you have a fast market move, a tall green candle on the break back above on the E, that triggers the buy, and then the stop loss sits below the lowest low of the vibration sequence. So I call this A, B, C, D, E the vibration sequence. It can go on and on and on, but the minimum is an A, B, C, D, E. And you'll find that you get a lot of great buy opportunities on that E wave cross of the vibration level. Then what happens here is you have a more important break on this big red downtrend line that we were just looking at, right? And so it creates a vibration level at $3.25 level. Here's what that looks like. The first move up is your A. This is your B, this is your C, this is your D, and then you get your acceleration candle right here, which is your buy. You can see E wave buy. And then the rule, you just place your stop below the lowest low. In this case, the D wave was the lowest low, so there's where your stop's sitting. I shot a horizontal yellow line here for frame of reference. What then happens is the stock pulls back sharply right here, but you don't get stopped out using this technique. So you weren't stopped out here, you know, very close to the low. What was the low? 238 was the low. This vibration was 280 right here, so an opportunity to buy, you know, 20 cents above the low. And then you were not stopped out using these rules. And then again, A, B, C, D, E, you're long here. You don't get stopped out again on a later entry. Of course, Anemoi also was really bowled up during this period, and especially before this big, powerful move. So then the next thing that happens here is, and I'm going to start to change the transparency on some of this stuff just so everything's not quite so noisy. So at this point, you guys focus on this yellow uptrend line, right? So price moves up, moves down, higher high, and you have a this yellow uptrend line. Here's your speed line that is drawn off of the tops of the first leg move, and that basically is the definition of an expanding megaphone melt-up fractal. It was key that we saw this drop out, right? So we saw this price drop out below this uptrend line. And then this note here, re-entry into the expanding megaphone melt-up fractal. That's what you want to see. You want to see re-entry on high volume and high velocity. So that's what you got. At that point, you assume, so there's no guarantees, but you assume what price wants to do is run all the way up to the primary speed line within this fractal. And you know, Wall Street's been really good at repelling this setup, especially since I've shared it publicly. But in this case, it got away from them, and you can see where we had the speed line attack right here. My note, primary speed line attack. Again, that's coming off of this little goofy, speed line that, you know, most people would not draw, and, you know, makes sense to very few people. And I can promise you 100% of the people at the big fund I worked at laughed at this stuff. They used to call it voodoo. But then they would, you know, come into the trading room and ask me to analyze a stock in their portfolio. So anyway, this stuff is real. And I'll show you a couple other elements here that we're combining the Anemoi terminal and BAM, you get even more edge. So this starts to get a little noisy here. I'm going to try to change the transparency of some of these things, clean this up. Okay, I guess that's good enough. So you have this expanding Megaphone melt-up fractal. You have your high velocity re-entry, meaning above this yellow uptrend line. And then again, this speed line is in play once that happens. We have two bogeys to shoot for here. We had this hidden retest based on BAM at 615. We had this one at 1085, and then we had that one at 1325. So if anytime you can see hidden retest levels that are sitting inside of an expanding Megaphone, whether it's to the downside or the upside, that gives you extra confidence on the high momentum, high velocity price move, that this thing could realize its full potential of attacking the speed line. Just because, you know, you have fast market moves to make contact on hidden retest levels. So already we knew we had this air pocket from, 350 up to 615. We knew we had an air pocket based on Anemoi from 361 all the way up to 736. We knew we had these retests at the upside. Anyway, it's just a really coiled up, high velocity setup, backdrop before this thing sparked off. Again, I told you guys, explained to you guys why the tools that I built favored this snapback move based on the negative velocity, which is pulling down this week. That changes at the end of this week, especially if AMC can close 736 or above. If it closes 736-ish or slightly under, it's just going to pancake that velocity. So net result is that it's sort of a non-event. It's not pushing down. It's not pulling up. We go focus on other velocity time frames. You guys can see right here the Anemoi hourly trigger. That was part of that 3-trigger cluster we just looked at in the Anemoi terminal. You can also see that based on this small degree downtrend line that was just broken, we've got another vibration sequence happening. This is A right here. Sorry, this is A. This is B. This is C. It's moving down into D. Also kind of sitting right above this 520 Anemoi hourly trigger. So hopefully what happens here is we get a fast market move. If we look back at that Anemoi terminal and think in terms of a tight three trigger cluster, and we think in terms of applying behavioral analysis, vibration at $5 and call it 35 cents. I'd like to see a little more movement to the downside toward this hourly trigger one more time, and then a fast market, high velocity move up through this vibration level to trigger a buy. Then the rules are you hide your stop below that previous low and then see where price heads from there. I'm not going to share intraday zones of strength and weakness just because they're gamed too much, but I did mention for the service the zone of strength early later today and early tomorrow. So no reason why we can't move right back up the upside. You guys know the rules behind these hidden retest levels. Once a hidden retest level is hit, it becomes vibration. So plenty of reasons for price to move right back up to 615. We already know about the 736 Anemoi weekly trigger. We need vibration up at 1085 and 1325. So a lot of reasons to continue to see a nice stretched out trading range. But again, I'd encourage you guys to go ahead and subscribe to the Anemoi terminal, watch that day trader chart, and then apply some of these other things that, if you want to, that I've talked about, in addition to talking to your own financial advisor or leaning on anything else that you guys use personally to get an edge here, because there's no reason in the world why you need to be lost with availability to the Anemoi terminal. It's just, like I said, in my opinion, the best tool out there. So there you go. If you guys are accessing the Anemoi terminal, keep a close eye on this tight 3-trigger cluster, and again, focus on velocity leading the move. And a lot of times, I like to just get rid of all the other noise and literally sometimes even the price, and just focus on the velocity, and that'll tell you whether or not price is moving to the upside. Velocity leads price always. That's it from my side. You guys, good luck.